Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone a couple of minutes past midday, which makes it just gone 1100 UTC. Big shout out to everybody joining the stream live. You can see we've got Touche, Erica H here, all nice and early. Welcome, guys. Welcome. Do you know what? It might be a little bit quieter in here today. The legend of ours, our dearest technical legend at the Nest, is away this afternoon. I didn't realise that. So it was down to my own devices to set this up today. So it's a bloody miracle that any of you are here. You'll probably be able to tell by the terrible thumbnail picture the fact it didn't get posted till about 15 minutes ago. But I didn't want to miss it, especially not being with you guys on Monday as well. Kelly, hey buddy, all the way from New Zealand. Well, I love the fact that you guys have managed to find it as well. And Bernd, how have you been, mate? How have you been? So people starting to flood in now a little bit, so really appreciate that. I'll give everyone a couple of minutes. So just explaining how my technical deficiencies in this department left me a little bit ill-equipped to get this out in a timely manner this morning, let alone being able to do stuff like people of my age struggle with. And I'm not by any means old, but for kind of crypto and tech, sometimes I feel ancient. I couldn't even I just trying to find a thumbnail to share to put the YouTube thing across, and then I couldn't find one, and any I found was too pixelated or it didn't fit the same format, so there's just some horrific one in there at the moment that's really rubbish. Oh, Kelly, I missed you too. I missed all of you actually on Monday. Had a lovely weekend away, visited some very old friends of ours. I was blessed to be my friend Wayne's best man at his wedding, and they moved away to kind of the Midlands in England, which is about 3 hours away from us here, lovely part of the country. So we drove up to see him and spend kind of the bank holiday weekend with them, and he has built a traditional English pub in his back garden. What an absolute legend. And for anyone that's had the experience of a traditional English pub, we are talking about all of the best and grittiest kind of artifacts about it. The old school bar, the low slung chairs, the hard wooden top tables and kind of wrought iron legs, little laser machines, all kinds of bits and pieces. Kelly Kellum, of course, mate. How could I not? Bernd, fine, thanks, BC. Was able to join live for a while. Yeah, no. Awesome. Really glad you got to rewatch the videos, but we definitely missed you, Bernd. Whack! Hello, mate. Yeah, nothing like a cheeky last-minute stream. It was stressful, mate, getting that across the line. I have nothing but respect for these technical people and the stuff that they do. Like QBS, our main man here, the graphics he comes up with, the stuff that he does. You just ask him something and he just does it in a second, and then you think you can kind of replicate that at late notice, and you really, really can't. Yes, Touche, you can't beat an Irish pubs, exactly. So fun enough, growing up, we used to have the Legion here, we used to have the Irish Club. My nan and granddad used to frequent them, and I remember these amazing nights growing up when I was a kid, and you'd be in there, there'd be snooker tables, these smoke-filled halls and rooms. I know people today would get all mincy about that kind of thing, but I miss that kind of atmosphere. Yeah, mate, we will all go for a pie one day. In fact, what I will do is we're going to be traveling a lot more next year. We're going to be visiting a lot of different places, doing some conferences, doing some shows, and here in England as well. So I figured it might be nice to just put some kind of meets on, get everybody together, have a few beers, talk some charts and chat and bits and pieces like that. It would be great to meet some of you legends in person, and I'm sure we'd have a lot of fun as well. So... thank you, Kelly. Yeah, it was lovely. We get this little bank holiday Monday here in the UK, and I think actually we have some of the least amount of public holidays of any country. So when they come around, you tend to make quite a big deal of it. Legends. All right, guys, let's crack on anyway. I see people really starting to fill this up. I know we missed our stream on Monday. Kelly Kellen, that sounds interesting. Thank you, mate. Yeah, reach out to Adrian, present an invite. Yeah, of course. Always up for doing some collabs and stuff, mate. Definitely ping us a message across. Let's see if we can get something together for sure. So I wanted to start off, just keep this simple, kind of cover a little bit of what we had on Monday, but also I thought something that might be a good subject today is discussing what we do when we get these really big pumps. Yeah. And how quite often almost always it's not about chasing them. Yeah. So I get quite a lot of messages from people saying like, okay, yeah, but you see these people, you see these influencers post and they'll say like, okay, we're ripping up to here. I've got a preset target in mind. Let's jump on board and chase this. Now, that's all well and good. But what I would say is, like with any move at all, people get far too caught up, missing moves like this, right? Now, The problem with that is, don't get me wrong, there's ways to play these type of moves. Probably one of the best in the game is someone like SZ, for example. But if you're looking at your kind of, easier to retrofit this, right? Once it's in. But if we look at this, just having these two as your fixed anchor points, and then as we look down here, once you've got these three kind of touch points on a trend line like this, right? Then what I like to do is I like the first touch point to be at the top of one of the wicks. It doesn't have to be. Right now, the two rules, and I learned this very early on in my trading journey from Tone Vase, was that you either want them to be touching the wicks and you want to keep that consistent. So let's say we've got these are just our first two touch points here. We keep that one and we stick with that as we go down, yeah? Or you allow movement to the bodies, yeah? So let's imagine rather than fixing to this wick, we allow ourselves to move here, but we can't violate the bodies, because if you start violating the bodies, then where are your parameters, right? Where do your rules sit? So for me, if we just had these first two touch points, right, then I would have been looking something like that to start with, yeah? Then when we get this messy price action here and price kind of chops around, I'd say, okay, there's probably not enough data in there for me to make that a valid diagonal. So then I would move it to something like this, yeah? Eventually adjusting it. So you can see they're really, really open to interpretation, which for me is what makes it very, very tricky. Now, one thing that I do like paying attention to, though, is when we get things like this, right? So you see how we have all these untapped highs. It was a terrible circle, isn't it? How we have these untapped highs. Well, quite often you'll see that these get run, right? Because you have this big liquidity pool that's kind of sitting above them. So before I digress too much more, what the point is that I'm trying to initially make is that when you get these big moves, people want to jump on board with them. Now, when is it okay to jump on board and when is it not? So for me, price always has a destination, right? Meaning that if people are buyers down here, for example, then the first question I'm asking myself is, where's the most logical point for them to consider selling their position, right? So first of all would be here. And then we have this kind of cluster of highs here. So I would favor the lowest of them, just purely to be risk averse. Yeah, you can start trimming profit here. You can start looking at how the price action develops. And then from what we have on our screen here, I'm looking at this, right? So when price rips higher, like it does here, Hans, my man, the long weekend took a little bit longer, yeah. Don't they always, mate? Don't they? Especially when you come back and you're expected to do something technical, which is definitely a deficiency of mine. So when we've got this big run up here, we can see that this didn't really offer much in the way of resistance, did it? Price just kind of ripped through this, yeah? Now, the problem here is this expansion, this move higher was then incredibly fast as well. And these moves are inefficient. We can see the fair value gaps that they leave, yeah? Meaning that there's not the correct pairing between the buyers and sellers. Price really shoots up to find the next available level. Now, when we get up to here, however, yeah, let me just extract this along. We can see that price really did start to find some pretty strong selling, yeah? Ultimately, we then had that typical move where you see that fake out, yeah? That swing fail pattern where price comes up, takes the liquidity above here before selling off. So the key thing for me here is there's so much danger trying to get involved in this move, right? So when we were up here and for a long, long time we've been consolidating and people were saying to me, all right, you're expecting a pullback here. What was my logic behind that? Well, my logic behind that, let's just see if we've still got it from one of our previous sessions, probably be down here. No, we've cleared it up. But basically what we had here, we had a weekly fair value gap sat in here, right? And then within that, these two daily fair value gaps, we see the one at the top here. Let me just draw it in for you guys quickly. And the one below it that we've now turned purple, right? So my first thought was that when we started to see this here, now look, see these long upside wicks. Yeah, we see this absorption. Price is trying to push up there, but it can't. Just keeps getting sold off, right? Because a lot of people that were buyers down here are offloading some of their position, taking profit, or looking to exit their positions completely, depending on a number of different factors that they'll be considering here. Could be news events, could be the fact that they're using Fibonacci extensions, or it could be that they're coming into a key area where there's historically been a lot of sellers before, right? But one thing is clear, and even if we move the chart right along here, so we just watch it as it develops, right? See these strong moves up? You get the long tail wick here to the upside, yeah, the nose. But then we see it kind of grinds up again. Now, as it gets into here, look how the price starts to develop, yeah? We start to see more black candles. That's not a problem because we expect a point of consolidation once we've had this level of expansion, right? Then we start to see the price is really, really struggling to get up. You see this big doji, yeah, or this outside day, that can often mean that you're looking at some kind of trend reversal, right? Now, all we're getting are these small body candles. Yeah, price is stuck within this range. So the first thing I do to look at this is I would look at this range here and I'd say, have we got a set range? We do. We have an inside bar, which is made by this high and this low. Now, just so that we can do this without kind of cheating and moving the price forward. Right, sod it. We'll keep it in bright green. Why not? Right, this is our inside bar pattern. So with this, what we're doing is we're saying to ourselves, right, there might be a bigger move on the horizon here. But actually, what we can do while we've got this information is if we start running these highs, while price is consolidating, we're expecting mean reversion, right? We've deviated here. Yeah, we've taken this low. Our expectation is for price to run this high. When it runs the higher, yeah, unless we manage to close above and then establish bullish market structure on a lower time frame, we expect price to run to the low again. This is the nature of consolidations, right? So we see price run up. Okay, gives us a real thing to think about here as it does it, but it does fly up here as we can see and take out this high, then comes out to the low, yeah? Takes the high again, okay? We can see here, like just as we were discussing, until we break and hold above, our expectation is that when we run the high of a range, we target the low via the 50%, the EQ, right, which we would draw in. So we see we get this price action again, right? Now we see we get price action do something slightly different. We see here how it starts to hug the low, yeah? Now, why would it do that? So it runs into here, very strong reaction that then takes us to the highs. Very strong reaction here above the highs that takes us to the lows. Strong reaction here. Price immediately moves away from that low, yeah? See, it doesn't stick to it, does it? It just flies away from it. Morning, James. Morning, buddy. So then when it gets to here, same again. Yeah, I know this can sound repetitive, but look at the upside wicks. They're being held within this range. This is just the ping pong game of people selling up here, buying back down here. And you play that system within a range until it breaks, okay? But one of the key things that we can look at here is how price is just sticking now to this lower level, yeah? So now we're saying to ourselves, okay, well, if price doesn't have the energy, if the buyers aren't stepping in here, then maybe they're starting to lose a bit of confidence, right? So as we step away from there, we want to zoom back out to our high time frame and say, okay, we've got this fair value gap here, yeah? There's something else we've got here that we haven't discussed yet, which is our premium discount range. So this is our expansion leg here, right? Yeah, this would be what ICT would call a dealing range. Yeah. Now, I will use them in a certain way. I've studied from ICT for many, many years, from part of his core mentorship, studied legends like SZ. I've been fortunate to work under a lot of amazing people. And people see the market slightly differently. So what I'd always say is really do a deep dive on this. And if you want to know about premium discount dealing ranges and stuff like that, go and take on and study ICT. Go and find other people how they use this principle. But for me, it's quite simple. It makes a lot of sense because this is the expansion, right? We first of all took liquidity from the lows, and then we've taken liquidity from highs as we've gone up, right? We then wait for the first down candle, yeah, that signifies that this might be coming to a top, and then we draw our range in. Now, the idea is that while we're within this, the high probability setups are that we're looking to short from the top 50%, which is premium, or take long setups from down here, which is discount. That's why this purple fair value gap was a really key target for me. Because if we were failing to push higher here, then I think the likelihood is that we rebalance at least this fair value gap here, but probably this one. And why? Because if I was a big player, if I was an institutional buyer or seller, then I would want the risk to reward to make sense, right? So let's just imagine for a second, yeah, that we've got like an upside target here, yeah? That's a previous high, right? And it could well be around 34, probably be up here around 35 because of the round number factor. But just for the sake of semantics, let's say that that's our target. So if we break out from here, this is our first kind of area of interest. That's where we expect price to push to. Now, if I want to take a long position here, yeah, and I know this is on a daily, but let's just say I'm super confident that as soon as we touch this first fair value gap at the top, we're going to shoot for this, right? So I place my entry here and I've got my target, but where can I put my stop loss, right? You know, realistically, it has to go under this swing low. That's not even a one-to-one risk to reward. There's no way that smart money, as ICT would call it, investors, hedge funds, institutional buyers and sellers are going to make that decision, right? Because it's a 50-50, it's the flip of a coin. Now, if we find ourselves in an entry position down here, all of a sudden we've got a 2.26R, meaning that we get over double the return of our risk, right? That is a really, really key factor in decision making. And also, if you were thinking about it, if you were programming a bot, if you were writing an algorithm, etc., you would want it to be working around those principles, okay? So for me, the risk to reward doesn't exist up here. However, let's say, for example, this is our high, right? And we're saying, okay, well, we think that we're going to get down here to this. Now, if we go here and we say to ourselves, all right, let's say this order block here, and let's just say if we return to that, we're going to take a short entry here. Now, we've got very clearly defined risk here, yeah? Fine, we're consolidating in what overall is a bullish trend, right? But if we're wrong above this high, yeah? If we're right and we come down to here, yeah, or potentially lower, then we can see that we have a much greater risk to reward, right? Ultimately, yes, the move does play out. We might have got spiked and taken out of it, but if we did, yeah, so let's say, for example, we'd thought that same thing here, right, and we'd allowed for our risk to be above this high, yeah, but ultimately price didn't trigger there, it took us out over here. Well, then when price comes back within the range again, a lot of people get put off by this, right? But actually for me, once we've done that and we come back within the range again, I'm even more confident that we're going lower, right? Because moves like this tend to be very sharp, very aggressive, and hardly ever leave people the opportunity to get on board, right? We're much more likely to be facing a deviation here, which is this. It means that we're sweeping liquidity from above these highs, from the top of the range, trying to convince people who really want to be bullish at this point, because we've had this big expansion. People are holding on to a previous bias. They're saying in their head, we have to be bullish here. Look at the move higher. Look at the move higher. We've had the consolidation. We're definitely going to push up. We've had a sweep of the lows. That's why it makes sense to not get married to a bias. And if you're wrong, nothing wrong with feeling like we're going to go up here. Nobody knows, right? But if we do get that move and you do get involved early and you get stopped out and price comes back within, then don't be afraid to counter trade your original bias. Just go with what the market is telling you. And that's why I like to wait for moves like this, right? Yes, it's getting me into the move a little bit later. But what we can see here with this breakout is displacement, right? We can see a strong, fast move lower. Yes, we've taken out liquidity below these lows here, yeah? But ultimately, we've left this fair value gap. And that, for me, offers a really, really brilliant point that we can look for this to offer resistance, right? Now, we know where we're wrong. We're wrong above here. Yes, we came incredibly close to it here, but thankfully it swept this high. But once again, if this was our theory, we'd got in here, we got a bit cocky with our stop loss and we put it too low and we'd been swept here. When we then come back underneath this fair value gap again and we can see that there's resistance, yeah, then on the lower time frame, we can just hunt for our short setups in here, okay? So the key thing is when we have these big moves is to not try and get involved in them too late. Does that make sense? Hasta la Feast of Barbie. Hello, mate. Sorry, I didn't see you sneak in there as well. Our dear friend Nitpar. After all, afternoon or late arrival, wishing you a brilliant Tuesday. You're all absolute legends as well. Happy days to you all. Wednesday, Nick, you're right as well. I didn't want to correct you there, mate. I'm glad you found that one yourself. Those bank holidays do make fools of us all. Should have seen me this morning. Good Lord, trying to set up this stream. Hans, good question. Where can we find good study material on ICT? Because what you get on Twitter does not line up with these strategies, because everyone on Twitter thinks they're ICT. We appreciate your input 100%, my friend. There are some exceptionally good ICT traders on Twitter, but what a lot of people don't understand about ICT, and the reason that a lot of these channels do really well, not criticizing their trading, by the way. I don't really know many of them, but I do know some really, really good ones. Is that because they're trying to kind of sell you a shortened version, because everyone today wants something bloody quickly, right? No one wants to sit down. So when I first studied ICT, I studied him for 2.5 years. Nobody wants that time frame. When I was studying other people as well, the great Larry Williams, right? I came back off the learnings of traditional market traders like Tone Vace, and obviously then SZ was massive for me because he taught me so much. When I kind of found him. And people like CryptoBird as well, looking at the market in a totally different way, much more of a trend follower. But, people don't want that kind of time horizon. People want to say, find me someone that's learned the stuff that can give me a really, really quick rundown of what I need to do. It doesn't really work like that because you need such a good understanding of market dynamics as well. So what I would say is always go direct to ICT's channel. And the key thing that you want to study is from his core 2022 mentorship. I think he's done a new one now. I studied the one from many, many years ago. A lot of the principles are the same, but there's a little bit of new stuff in there as well, because markets do evolve, right? Consequent encroachment, bits and pieces like that that's kind of come into his teachings now. But yeah, go directly to the ICT Core Mentorship 2022. That's the model, right? Now, what you'll find is other people, a brilliant point there, James. Yeah, exactly. Or the old saying of, you can give somebody a fish and they can eat for a day, or you can teach someone how to fish and they can feed themselves for a lifetime, right? But people don't want to learn how to fish. They just want to be given the fish, right? And actually, the reason this industry has such a big failure rate is because so many people get very close to it and become impatient, yeah? Just take a look at Trader SE's profile. He's got this brilliant thing on there about plan, trigger, and then in the middle of it, it just says, this is where you screw up, right? He doesn't say that exact term, a bit ruder, but, we're not beyond the watershed here, so I'll try and remain polite. But he's got a really, really, really good point, right? Is that people don't want to put the hard yards in. Now, and also have the patience. So if you're going to look at the stuff, look at the core 2022 mentorship, right? Now, some of the traders out there do trade the systems really well. For example, there's a lot of ICT's teachings in my different strategies, right? From my swing trading strategies, my day trading strategies, certainly the way that I trade ranges is a lot more heavily kind of weighted toward SC. But things like fair value gaps, right? Really, really deep dives into that, order blocks, market dynamics, algorithms, how they affect markets, interbank dealing ranges and bits and pieces like that, like the interbank algorithms, and intraday dealing ranges, which have been really helpful for me. But I've also studied under a lot of other people. So I'd avoid the other people that are trying to teach his methods and go straight to the source. It will take you a while. He does have these wonderful rambles in his teachings, but the stuff that you learn from it is unbelievable. And if there's a specific part you want to learn about, then if you just go in and you type in, say, ICT dealing ranges, just make sure that you're getting the one actually direct from ICT, and then look at it, and then you can kind of, what I would do is I would study his core mentorship in sections. Give yourself a couple of study lessons a week, really take heavy notes, and then you can kind of decant it as you go on and then write it into little, what I was doing years ago, I had all these notebooks, these handwritten notebooks, and I would write everything out in detail, pages and pages, and then I would spend some time at the weekend taking the more detailed notes that I'd written and kind of make them into bullet points once I'd really studied it and understood it. So if I ever needed it as a little guide to reference to, I didn't have to go through pages and pages of stuff. Nit, my man, send you a DM. Awesome, man. I'll take a look at that. Yeah, so the Twitter and X changeover thing has been a little bit ropey for some of us, I think. So I think they're still working out a few glitches, but I will definitely get back on there. I've been pretty bad with that. Actually, I do need to update some more stuff on there. Hans, you're more than welcome. Yeah, exactly. I mean, look, it took me probably the best part of similar kind of time, 2.5, 3 years before I had any kind of consistency or profitability to the point that I could look to move away from my current job. I didn't, because I was running a business I really, really enjoyed, and it was doing a lot of, in my eyes, was doing a lot of good in the world, helping schools. But when I did decide that my time was up with that, I knew exactly what I wanted to go into. And thankfully, I'd had the ability to put the groundwork in. And then I actually took a year or 9 months off completely to just study 8, 9, sometimes 10 hours a day, 6 days a week. And I think if you take things like that seriously, there's something called the 10,000 hour rule, which you'll learn from greats of people like Tiger Woods and people like that, these real experts in their field, Muhammad Ali, for example. And really, it's just about consistent, high-level practice, So that means really conscious, really good practice pushing yourself. I don't see they're just staring at charts all day, wondering what it's going to do. Smash yourself back, hit bar replay mode, and just start running through it and say to yourself, okay, right, daily now, where's my high, where's my low, where's price reaching for? Do I have a clear bias? Yes, okay, go with that bias, decant it down. Do I have a clear bias? No. So in fact, let me finish off on what I'm going to do here, and then let's run through a few top downs, because I know that these things are really super valuable to people, and hopefully that will continue to be the case. But basically, let me just finish up on these questions quickly, and then I'll tie up on this, what my thoughts are in terms of how we're looking at these big expansions, and then we'll run a couple of top downs so that you can really go away, if you want to, of course, throw your head into the charts and see how we kind of think about this. Tony, my man, good to have you back, my friend. Really, really good. So James, he's given us advice as to what playlist to watch for beginners, market maker course, scout sniper, precision trading concept. Yeah, and it's in the 2022 mentorship. I mean, he has like some other little videos, some newer stuff that's coming out now as well. But I really like the idea of doing the course, right, rather than like trying to find any shortcuts and bits and pieces. But see how you get on with it, and you're always more than welcome to come on the show and have a chat with me about it on a Monday or Wednesday, and we can kind of deep dive into some of the theory then as well, if that's of interest to any of you. Nick, nice. Started with the primer course, still working through it. Yeah, I think the primer course was slightly before that. But again, you've got the original core mentorship, which is the one that I did. Then you've got, I think, the primer course 2022 mentorship. You've got the snipers, scalper series in there as well, and bits and pieces. So it can be difficult to find them. ICT does do a video, I think, actually, which he did a while ago, saying the order that he would study it in. And I think the first one on that might be 2022. But if you type in YouTube, ICT, how I would study these courses or what I would tell myself now, I think it's one of those two things. He runs through it as well, but that's a really, really big set of courses. But it's a good way to have it out as a guide. Hasta la vista, Barbie. Let's have a look. Hit BTC on the 4-hour chart, the FVG. Nice. Yeah, well, let's take a look, shall we? And Tony here as well. In one of ICT's first 2023 videos, he lists in that order. Yeah, exactly. Well done, mate. So thanks, Tony. So for anyone interested, it's the first video of ICT's 2023 set where he lists the order in which he would study. And again, I really, really recommend that. I don't recommend just studying ICT. You're more than welcome to if you want to. I liked to build a kind of broader knowledge of the market so that I could be a bit more selective, but I really do recommend. There you go. Awesome. Well done, guys. So, okay. So, yeah, we're going to bring up from what Hasta la Vista Barbie was just saying in terms of we're going to drop this onto the 4 hours. So we get the principle here, right? We've had a really, really big drop. For me, it didn't make sense to look at long positions here, here, or here. I wanted to look here or potentially here. And we can see, or you're welcome to see if you go back through my old Twitter feed and YouTube videos and look on the Nest and the Bitcoin reports and stuff, that these are the real key areas. Now, when we ran this, a lot of people were calling for really, really low numbers, right? Really, really low numbers. So one thing I just want to say when you see stuff like that is just don't forget to zoom out, right? Now, when we're looking at this zoomed out, I think we're just kind of looking at this, aren't we, really? Until we got to here, for me, this was pretty bullish, yeah, on a weekly scale. We can see we're holding higher highs, higher lows, higher highs, higher lows, higher highs. It's had a really, really nice structure to it, right? And actually, when we look in here, we can see really quickly as well, bang, down into this fair value gap, yeah? Lovely, right? Price, where does it come from? Rebalances this fair value gap here, right? Now, the reason that I was skeptical here was because if we look at this high, here we go. If we look at this high here, yeah, look at this move above it, came down into it, strong reaction higher, yeah? It really didn't revisit that high. It just wanted to make that high support, yeah? So when you have that and you lose or you rip through these highs and you find it, you treat it as support, that's when you can look for it to push higher. We did not, however, get that here. We had an immediate weakened reaction. We failed to pop above this, yeah? So look at this one here. Actually, let me do that problem. Been getting really terrible at drawing these lines recently, and that's no better example. But you can get the gist, right? Consolidation, we had this lovely balanced price range or this inverse fair value gap, which is this bearish fair value gap being closed above with a bullish one. We expect this to be support, yeah? We then find this as support. We're holding these old highs as support. We dip into this little fair value gap, down into this one, expand higher. Another fair value gap, dip into this, expand higher. So the natural course for me is to sit and look at that and say, okay, well, what's our expectations here then? The expectation here is if we're going to move higher, we're probably going to do it by rebalancing a fair value gap and continue this move up. All right. Now, when we move to the daily, and remember what a big time frame the daily still is, yeah, we now just want to use the same principles. Okay. So we're going to get rid of this fair value gap because that failed to hold price, as we know, and that now becomes resistance, right? Now, if we look at this as two sides, we look at this as the buy side of the curve, yeah, and we're now looking at this as the sell side of the curve, I'm more interested in what's happening here on the sell side. Yeah, so that's when we've broken structure up here, had displacement, prices retested that displacement, and then broken lower to search for liquidity. This is the sell side of the curve. So I'm interested in what these are doing, right? However, this fair value gap here, which was supposed to be bullish, got ripped through with great ease. And wherever we see that, yeah, then we expect this to then act as resistance as we come up. Yeah, we closed below it here. We wait for a retest of it. We also have this bearish fair value gap, which sits over the top of it here. Yeah. So for me, I'd be looking at that and saying, okay, well, when we broke down here, had we not taken this liquidity, which was a key factor for me, we couldn't take this liquidity. Why? Because now we don't really know where price is going on a daily scale, because it could be searching for liquidity up here. It could be looking for liquidity back below this, but we don't really know. All we can do is base our information on market structure. Yeah. So let's get rid of this. And then let's zoom in and say to ourselves, right, well, what are we doing on a daily scale? On a daily scale, we're holding this bullish fair value gap, which I really like. The other side of it as well is we're holding this order block, right? I won't draw it in fully just to save the chart being too messy. But look, that's the order block there, the top of the body of that candle. That is beautifully supporting price, right? In line with this FVG. So what have we got here? When we put those two bits together, we've got two key areas of support. Sorry, just have a sip of tea. So what else have we got? Well, we've run this key low. Look at the size of this wick. This wick is massive, right? Purges to the downside. There's clearly a lot of buyers in here, right? Now, it doesn't mean that price isn't going to come up to here and fail. However, we're noticing we're not getting any closes, yeah? So what you'll see is when price tends to put in a bottom is you see this absorption, you see this constant push for price to try to get lower. And then we've got this collection of like pin bar candles, yeah, telling us that price is going lower, getting bought up, right? Think about the toy soldier example. The battalion of toy soldiers has tried to advance into enemy territory, right? But the toy soldiers on the other side have pushed them right back. This line is just the footprints of where they've tried to get to, but the body is where the battalion sits, yeah? Look at the difference in this one, right? This one, the advance was huge. There's a huge amount of toy soldiers in there, right? Yes, they tried to make it here, but only got pushed back a little bit, yeah? Shows that there's strength in that move, right? A big move like this showed a huge army footprint coming this way, yeah? But the toy soldiers got pushed back to about halfway, yeah? So there, we're a little bit more unsure. So on a daily scale, you know, we have to be thinking a little bit bullish here, right? We haven't fully regained market structure. Microstructure is with us because we've got this low, this high, higher low, and a higher high, yeah? But what I would want to see on a daily scale is this candle close, and then should there be a gap, as there is at the moment here, then I'd be looking for that. And then in the following day, I would want to see price draw into this. And then if we build bullish structure on the lower time frames, my expectation is for higher prices. All right. And Hans, yeah, that is a really good point. It does look a little bit like an upside down cup and handle. Yeah, I know what you mean, mate. It's one of those patterns. I don't actually trade those kind of chart patterns personally, but I know people that do exceptionally well. People like Axel Kayaba, who's a good friend of Crypto Burbs and an amazing CMT trader himself. So on a daily scale, that's kind of really where we are. So now we're going to drop down to the 4 hour. And as Asla Vista Barbie was pointing out as well, we've got a little cheeky fair value gap here that is of interest, right? Yeah, love you too, Asla Vista Barbie. Love all you guys. Always coming with the good questions, excuse me, and giving up your time, which I do really appreciate. Let me just turn these session breaks off, actually. So they're just the lines that go down to depict the different sessions throughout the day. So moves like this look great if you're on board with them. I think getting on board with a move like that was fairly speculative. If you were on board with it, if you did have some great TA behind it, some people might have caught some moves on some lower time frames and then kind of got caught out on that. But I doubt anyone was just, or many people, unless they manipulated it this way, which means I doubt they're watching this stream, is that they've bought in here and then had this absolute rocket. Yeah. So when we're looking here at a 4 hour, and this is what Asla Vista Barbie is alluding to, is that we've got this really big FVG, right? So first of all, let's strip away all the noise. We know we're rejecting from this inverse fair value gap at the moment, and we know that there's also a daily bearish fair value gap above it. But let's now look and let's treat this 4 hour like it's the only chart that we've got. Yeah. So as we're looking here, we see this tight consolidation, right? Now, technically, if I was looking at this as like a power of 3, and I know it's quite a messy one, yeah, we've had kind of fake outs above and below, etc. But if this really was our range here, and the reason I'm saying that is because this one here, if this was our, so power of 3 works like this, right? You have consolidation, manipulation, and then expansion, right? And if this was a power of 3, my concern here would be that that's the consolidation, that this is the manipulation, and then the distribution is going that way, right? I'm not saying that that's what's going to happen, but I'm just saying that's how you would look at a power of 3 concept, right? Because as it stands, even if we extend this range to cover the wicks and that here, there's no way that there's a manipulation this way before this move higher, right? So at the moment, I'm still a little bit cautious. Now, there are obviously a lot of other factors that we need to consider here as well. News events, right? Now, I know I don't talk about the news a lot. Excuse me. But the funny enough, someone commented on one of the YouTube videos that I saw earlier saying they really enjoyed the show, but they felt there really wasn't enough of a fundamental or news-based element to it, which I agree with. I'm not an expert in that. My team are experts in that, right? I have an amazing fundamental analyst team. I have an amazing team that look at news events and bits and pieces like that, and we consider those factors every single day when we analyze the markets. However, there is a really, really big risk when you're doing that you can throw too many factors in. Yeah. So your price action might be telling you you're going bullish, yet you're worried about an emerging news story. And then you're looking at what's going on in other markets, and it can just be a little bit tricky. Okay. So what I do like to do when I'm looking out for key news drivers are things that typically are crypto related or heavily related to risk or counter risk. So I just use a little platform called Financial Juice. There's a few really good ones out there, and it gives you what's known as red folder news events. That's typical like your FOMC meetings, right? Whether you've got core PCE readings like we've had, JOLTS numbers, bits and pieces. And when you look more at traditional market trading and FX trading and stuff like that, then you kind of notice that they have a much bigger effect. However, we need to always remember that crypto is like a beta risk asset, right? So it's a very risk asset. That means if things like the S&P 500 or the NASDAQ, which is very heavily weighted towards tech stocks, if those things are suffering, very often crypto is going to suffer as well. In the same way that if we see a lot of strength pouring into the dollar, it often means that people aren't being very speculative towards risk, meaning that they're looking to put their money in safe havens, such as government bonds, or the dollar or safer currency pairs, than they are to speculate on things like cryptocurrency, right? Now, obviously, we had this news about the SEC, right? Now, they have been obviously a thorn in the side of crypto. Now, I understand why they exist. I wish they were run better and probably by more open-minded people. But their job is to try and keep things safe, stop people getting frauded. However, there is also this other kind of underlying narrative there, I think, sometimes as well. But I won't get into the politics of it. However, what we need to look at is yesterday they came out and basically it looks like they failed with their case against the Grayscale Bitcoin Trust, which is an ETF, which is big because it has real market presence and real market impacts, unlike crypto, which obviously isn't floating. So what does that kind of mean? Well, when we look at that, we look at the fact there were really bad JOLTS numbers yesterday as well, and PCE was down. It means that actually that's quite good for risk, yeah? So you can get these kind of catalysts where you have these big pumps, right? And as Bernd is saying, here's where everything went up yesterday. Gold, Euro, USD, SPX, and the dollar index went down, yeah? But if you look for the volume for BTC, it wasn't great or convincing. No, I'm with you. It wasn't really great or convincing for me. I certainly didn't see the pump coming. Often you don't with these things, right? But what Bernd's saying is right. Everything was super bullish yesterday because basically the Fed will have a narrative of being hawkish or dovish. Hawkish meaning that they're trying to flood the market with news events that make people want to tighten the purse strings, which is bad for tech and bad for crypto. Or they're being dovish, meaning that they're trying to kind of encourage the market to be a little bit looser with its purse strings. Now, yesterday, the issue was that there was kind of a lot of the news kind of came together in this perfect storm that showed a lot of weakness in the position of that, which meant a lot of strength for people to invest in speculative stocks. So we saw that big pump across the board. The question now is it sustainable? All right. And just to go back to, excuse me, to Asta Vista Barbie's point here. So you're looking here, Asta Vista Barbie, at the fair value gaps here, right? Yeah. So as this drops, we leave these here. So one of the things I think confuses a lot of people about fair value gaps, right, is they're just everywhere. Yeah. So at what point do you start ignoring these and favoring these, or vice versa? So what I like to do is I like to, in this case, I would zoom out, and I want to find an area where there's as little fair value gaps as possible. Yeah. So in this case, we can see that we've got one. Now, on a daily scale, what I'm saying to myself here is, if I'm in any way unclear on market structure, this is how I'm going to look at it, right? I'll keep this in red because it's a bearish fair value gap. So on a daily scale, my last point of reference, yeah. So I'm either looking for old highs and old lows to be swept. We can see we have a sweep of these old lows here, but still I need to see a recovery of market structure, yeah. Now, we do have a high here, yeah. So we can see we've got an intermediate term high here, as ICT would call it. Now, in an ideal world, if we were looking for bearish continuation here, you wouldn't see this broken. When it is, it means that we can then start looking for this fair value gap that's emerged here on a daily scale, but we still need this candle to close before we get it. So at the moment, on a daily scale, I have to hold a bearish bias, yeah, until this fair value gap closes, in which case I can then start targeting long positions, right? So that's my information on a daily scale, right? So this is what I'm going to do. I'm going to remove that at the moment, and I'm just going to put a red line along the board here to show that I'm bearish there. And that's going to be double thickness so that it can allow for the fact that that's a daily bias, yeah? And this is what I do sometimes when I work with my students and we go through the charts and look at these if you want a visual point of reference. Because now we drop down to our 4 hour. Right, we know our overall daily bias here is bearish, right? So what did that mean? Well, what it meant is that when we were here, yeah, when price was chopping around, we're looking for bearish, yeah, arrays, as ICT would call them, or that means fair value gaps, order blocks, etc. Yeah, we're looking for that to suppress the market. Why? Because we've got a daily bearish bias, from here, right? So quite simply, let me draw this in here. There's our bearish order blocks. Yeah, the last up candles before price sold off, and we have our nice fair value gap after it as well. So let's draw this in red. Yeah. And here is our bearish fair value gap, right? So what we want to see is we want to wait for price to interact with either, which we get here, dips into our fair value gap, comes into our order block, right? Now we want to look for bearish trade setups, which we get here, yeah? So obviously we would take them on the lower time frame, and we're simply searching for liquidity lower down, which in this case we ran this higher, yeah? Where's our next swing low? Here, right? So this red line that tells us that we have a bearish high time frame bias means that we are now patiently waiting. This is if we're trading the 4 hour, yeah? We're patiently waiting because, look, we don't want to trade any of this. Why? Because there's no triggers in here. This order block should be suppressing price, so should this fair value gap. The fair value gap will act as a draw on price, but we expect the order block to contain price, yeah? Right? So we can see, if we draw this across here, see the cursor? See how we didn't really manage to close above the top of these wicks, which is the order block? That gives us more conviction here that price is getting pushed down. Now, when we do ultimately engage with this, we drop onto the lower time frames, yeah? Find ourselves a breakdown in market structure, liquidity sweep and a breakdown, and then we target this low, yeah? So does that make sense in terms of how we're looking at that? That's how we've ascertained our daily bias and then looked to move that onto a 4 hour chart, right? Now, what do we need to see here? Well, we've said to ourselves, look, on a daily scale, we still need to see this closed to hold this as a bullish fair value gap, right? However, on a 4-hour scale, we can see very much in here, yeah, that we've had this expansion higher. Now, what I'm saying to myself is if price is going to push up from here, where's it most likely to go? Well, we have these highs up here. We've kind of dipped into this fair value gap here, so we could push up here into this one. So now I'm going to drop down onto a lower time frame. I'm going to take a look at an hourly, right? Because I want to get a clear indication on what price is going to do. Now, for me, like I said, I stepped into today expecting lower prices, right? Now, how would I have traded this? So I wasn't interested in trading this yesterday. But looking at this and using the same methodology, right? This should have been a bullish fair value gap, right? Because our 4-hour bias is bullish, right? Our daily bias is bearish, but we can still expect to move up as we're counter trading it, yeah? We just want to get that bias, decant it down, and then understand our risk. So this was a bullish fair value gap, yeah, on the hourly. Now, see price loses it and closes below it here. Yeah, we see we just get this body close under here. That's telling me that price is then looking to move a bit lower. But also, once we've had that close below, that becomes bearish, right? Or actually, it becomes an inverse, right? Now, what else do we have up here supporting that theory? We have this bearish fair value gap as well. So can you see how these elements start to stack on one another? And you can see how it's pushing price down. Price is struggling to get back above these, all right? So as you came into the London session this morning, you would have been looking for price to trade higher before ultimately then selling off, okay? So if we drop down to, say, a 5-minute chart, and then we're getting even more data, right? Now, I wouldn't have traded this. It could be open to some of you guys because it's Asia, but we didn't get the setup in London because we can see we already had the drop here. But can we see as we look back here, right, how price reacts? So, first of all, we have liquidity resting here and here. This didn't take out this high. So remember, like we drew before, we said, look, we got this high here as well, right? And this, which becomes a key area of interest, right? Because that's our, in fact, let me just get rid of that. It looks rubbish. Draw this in properly. There's another bearish fair value gap. So if we're trading this during Asia, the same way as if we hadn't got the drop in Asia, we'd be looking at this in London, right? What we need to see very first of all is price take out some highs, run some liquidity and find resistance. Yeah, we can see here price spiked up here. Yeah. Now, if you were just paying attention to the 5-minute, you might be thinking, brilliant, we're going to go long here, but you don't because you've got the high time frame context telling you that we're looking for shorts. Yeah. That's where I think a lot of people go wrong. They're focused too heavily on the lower time frame. Now, what it doesn't mean is that we're just, if price comes all the way up here, that we're going to hold our short bias. No. What we've got here is a set of parameters that if we see a rejection here, yeah, then we're looking for lower prices. However, if we see price flip this, retest it, we look for our structure recovery on the lower time frame and we look for higher prices, right? But we didn't get that. We ultimately swept liquidity here, yeah, we broke down here, and in this market structure shift lower, we would be looking at the key areas of market shift, or I would certainly. So here's our sweep. Yeah, just do that a bit bigger so you guys can see that. There's our sweep. Here's our high. Yeah, here's our low. Yeah, flanked by two higher lows. What are we looking for our shift here? We're looking for a break of that. Yeah, and then that's where we're looking to go short. We can drop this down onto a 1 minute to enter. You can use it as a breakaway. You could also, even if you wanted to, probably don't really get one here, actually, a setup from it. But if you were looking for a breaker, for example, you would be looking for the last down candle before this sweep here, in which case you draw that in, and ultimately price didn't retest it. But that doesn't matter. You're not going to get into every setup. The idea is that we've managed to construct a bias by looking at our high time frame and running that down through to the low time frame. And just to kind of drag it back to your question there, Hasta la Vista Barbie, as we zoom back out again, yeah, then these parts here on the H4 become less relevant to me for a few reasons. One, we've closed above it here. Yeah, so that's typically bullish, but we have engaged with this here. But because our structure is now bullish, and because we've set this bullish fair value gap, yeah, I'm looking at this to hold, but doesn't mean that we can't get a purge down lower into this, yeah? So once we're bullish, we've confirmed structure and we've got bullish fair value gaps, yeah? Then I'm holding a bullish bias, right? But I'm still very, very conscious of a high time frame bias, yeah? Meaning that if I'm looking to go long here, then I'm aware of a few things. I'm aware of this order block, right? And I'm aware of these fair value gaps. And I'm saying to myself, okay, if I want even more conviction, what can I do? Well, if we take the high to the low here, yeah, and we take that as our dealing range, yeah, premium and discount, then all of a sudden, while we're up here, we're starting to look like favouring shorts again, right? That plays into our daily bias. So that's where we want to be cautious. How do I play that? Well, if I'm ever trading against the trend, remembering that the trend is our friend until the end, yeah, then I just reduce my position size. I normally use 2% of my account for my risk. So my risk, meaning if I lose the trade, my 1R loss is 2%, right? Now, if I'm counter trading the trend, I will drop that to 1%, yeah? Meaning that I understand that I'm taking a riskier trade setup, but ultimately that trade setup, I've got good reasoning behind why I'm taking it. Okay. So does someone want to hit me up with let's try and rip through two more charts, shall we? Get a couple of alt requests. 1 second while I just blow my schnoz. Boom, he's back. So, awesome. Thanks, Hans. Yeah, guys, do smash the likes if you're enjoying the content. And please do feel free to comment if there's things that you think I can do better or things that you want to see in the show more. And also as well, please don't be shy to comment on this channel. We've got some amazing patrons here, some people that are super knowledgeable and people that are very, very welcoming and always happy to help. We've all been, don't ever feel like you're too much of a noob to ask questions. In fact, the more you accept that and the more questions you ask, the better it will be for you. So does anybody have an alt they'd like us to look at? Anyone is fine for me. Awesome, good man, James. Well, I'll just pick one at random. Maybe this was live. When was that? 30th. Wow, time absolutely flying by, isn't it? Almost September already. Awesome. We'll just get rid of that. So we got a nice clean chart to go back to. Oh, awesome. Yeah. All right, Hans. Let's take a look at gold. Excuse me. Do you know what? I think this is actually developing some kind of weird hay fever. I seem to be more bunged up for all of these different ones that I'm doing for it. And Aerosmith Forever. What a brilliant name. And what an awesome band. Yeah, wicked. Let's take a look. So we'll do that. We'll take a look. The last two charts we're going to do is we're going to take a look at gold and we're going to take a look at Litecoin. All right. So let us select all of this. Sort all that out another time. That sounds a nice clean chart to work from. Right, so here we are on the daily. Right now, it can pay dividends sometimes with traditional market assets like this to zoom out a little bit more as well to the weekly. But we can see as we were looking at, when were we looking at this? Back in from 2021 all the way through, right? Similar principles here. See bearish fair value gap, come above, back down below, but fails to set another bearish one. Then when we expand above this higher, that red line is our shift of market structure, our market structure break. We're now looking at this fair value gap here to be drawn down into, which it does, to expand higher, right? So we're always looking for the same principles, right? No matter what market asset we're looking at. So let's look at this on a weekly. Now, on a weekly scale, employing exactly the same principles that I was just discussing, we're going to have our bias being driven by recency, right? By recent price action. So on a weekly scale, we've swept this low, right? We've taken out that low, and ultimately we're rebalancing this fair value gap on the left. Yeah, we have this imbalance here as well. We've got the fair value gap. So what am I looking for? Well, the expectation would be, if we were expecting lower prices on a weekly scale, was when this candle closed and left that fair value gap, we would have been hunting short positions in here, right? Now, this closes above here. I'm going to see that as a sign of strength, and then ultimately looking for this on a weekly scale, yeah? Reaching above this high. Now, let's drop that down to a daily and see how that plays into everything, yeah? Now, on a daily scale, we can see that we got this a little bit sooner, right? So, obviously, very, very aware of our weekly bias. Remember, like I said, it doesn't mean that we can't counter trend that bias. Why would we do that? Well, first of all, because on a daily scale, we're delivering from a bullish fair value gap. When we created this, we would be looking on this day for price to draw down into it, hold, and then expand higher. Where would we target? Well, in this case, the first one that I'd be looking at is this, right? So thick red line, this is our order block on a daily scale, yeah? So I'm going to pop in OBD. So we can see here nice and clearly, when we were in here, yeah, we could be taking counter trend trades from a weekly, yeah, and on a daily, because we've yet to recover that. But as soon as, so this is a really good way to think about this, right? I always ask myself, where is price delivering from? And where's the most logical, where's the clear and obvious place that it can target? Yeah. So that means price is delivering from a bullish fair value gap. All right, so no reason to be bearish. When would we be bearish? Well, if price carved through this, closed below it, we would look for a retest on it, and then we'd look to trade it lower. Yeah. But it didn't. Price has respected this. So that means, and I'll just pop this on here and show you just how we can do some trade setups from here. That means that when price dipped into this, until proven otherwise, we're trading that as a bullish setup. Now, price is currently sitting in this order block, right? So we want to see price hold here. So that means if this closes here and we leave a fair value gap here, we would look for price to dip into this, find some bullish setups on the lower time frames, and then attack the liquidity resting higher up, all right? So now we're going to move down to a 4 hour here. Stream Doctor, sorry, let me just look. Just wanting to show some appreciation with a hi and thanks. I was only just notified of the stream, so we'll be watching this back later. Me from the future says hi, many thanks. That's awesome, Stream Doctor. Thank you very much. Get such lovely people on this channel. Yeah, if you've got any questions as well, mate, don't hesitate to just ping me either at the Nest or via Twitter or whatever, and we can have a good run through that. So let me just turn these off for you as well, right? So we've got this a bit clearer. Now, remember we drew this in here. The reason that I put that on there is because we're not going to be looking for long positions before that, because price simply hadn't drawn down into this fair value gap at that point. However, what we can see is this 4 hour fair value gap that sits above it, offering us our key target. So we're not stressing here. We've got a few different charts. And again, something I'd recommend to everyone is lessen the amount of assets and pairs you look at. If you're looking at this across 10, 12, 15, 20, 50 different crypto pairs and traditional market assets like gold, silver, etc., you're going to struggle. Focus on maybe 2. No, it sounds really really, really silly, right? Or 4 at the most. And just really get your teeth into it, right? So like with this one, bullish fair value gap on the daily, right? Does the 4 hour chart support our theory? Bear in mind, we're not looking for price action beyond this at the moment. Yes, we've got our 4 hour bullish fair value gap here, and price is drawing down into this. Where else is it drawing down into? Oh. Yeah, we would look at this order block here to support price as well, but ultimately it doesn't even get down to there, which is a sign of strength. Now, I'll try and see what we get on the 15-minute here, because I appreciate a lot of you guys are, not super low time frame traders. You would be looking for something. And actually, we get a really, really nice clean setup here. So I'm looking for a couple of different things when I want to get involved in a play like this. One thing I absolutely love to see is an inverse fair value gap. Right? And this is something I've been using a lot more recently. There's a really, really great little ICT trader called DD on YouTube and Twitter. Me and him have had some brilliant chats recently, and he was, you know, he's a really, really proficient user of this on the lower time frames, and I like it on the kind of slightly higher time frames. I always use it as an indication of a top or where you're looking to get an SMT reversal. But what we can notice here is this should be delivering bearish price action, right? Bearish fair value gap. If we were going to react from this and go lower, yeah, then our expectation would be for that to reject price. However, we don't. Also, we're within our New York trading session, which for me is important. Now, it doesn't mean you have to trade the New York session. Just make sure you've got an appreciation for the session that you're in, and then you can look from there to trade it in a way that suits you. So now we've closed above that. All of a sudden, I'm saying to myself, right, now I want to go to an execution time frame. Yeah. So what am I looking for? Quite simply, I need to see this act as support, right? And then I just want to see a market structure break, you know, for continuation, or if it had dipped lower. Now, we want to see, remember, this is always the same, guys. You'll see this and you hopefully notice the consistency of this as you look back on other videos. We want to see a sweep, which we get here, right? There's a low. Why? Because it's flanked by two higher lows. We've got this as support. Now, if we want to see this act as support, what do we want to see? Remember what I'm always banging on about. I'm always banging on about displacement, right? So that's our shift of structure or our continuation. Do we have displacement where we can target? We absolutely do. This fair value gap. So price displace is higher. Do that in green. That's our fair value gap that we're looking to target higher prices from. Yeah. And it's really nice, clean setup, this one, right? We dip almost straight back into it. We've got a ready-made low here for our stop loss. And now we're looking to target price above this swing high. However, I would be very mindful of these fair value gaps, yeah? And I'd be saying to myself, because there's no highs to target along here, so it's very difficult to make interim targets. So I'd be looking along here, and as I'm following price action, I'm aware of these. I'd probably be looking for this first one here, right? I like to see normally at least a 1.5 or 2R. I think we'd probably get at least a 1.5 here, wouldn't we? Yeah, 1.6. I'd probably be looking to move my stop loss to entry round about there. Still holding the longer term targets. You can look to trim some profit. And then in managing the trade, yeah, you're looking for your structure to hold. Yeah. So you'd want to see a structure breakdown, or you'd want to start seeing a raise violated like we get here, right? So you see here higher highs, higher lows, high, lower low, come up to set this higher high. See this move lower that takes this out down here. You notice we get this fair value gap here, right? So for me, that now provides a ready-made target. I can say, look, if we start breaking down below these lows, I can look to get out or trim some profit, right? Which ultimately I would do there, yeah? So we've made that. We haven't got ourselves all the way to the top, but price has ultimately then come back down on us, and we look for setups the next day. All right. So I hope that makes sense. Let's just do one more run through on Litecoin, yeah, which Aerosmith Forever asked for. And then hopefully this time it will kind of make a little bit more sense if I've gone through that in maybe not the clearest way. All right. We'll do a full top down on this one. Whack. No problem, brother. Brilliant to see you. I'll catch you around the nest, my friend. And wishing you a fantastic week ahead. So let's just hide these bits and bobs. Give ourselves a nice clean chart. Go on the daily. Here we go. Right? So now we're looking for recency, and you'll notice that this does look very, very similar to Bitcoin, right? So if we're looking at this, I'm saying to myself, okay, and we'll just do this in red again. When you see my charts, you'll see these in grey, but I like kind of doing them like this because it does make it seem like, you know, you can tell this is a bearish fair value gap, right? On a daily scale, for me, I can't be bullish yet until this closes and we create this bullish fair value gap, because we don't know right now. By the end of the day today, price could have just ripped down here somewhere, right? Hang on, do that a bit better. Price could just be ripping down here somewhere, all right? Closes that gap and then we've not got anything to trade. So what did this mean here? Well, it means here, so yesterday, even though we've had this big expansion higher, I would still be favoring on the high time frame short setups, right? So then we move to our 4 hour. So we can see here we had this big move high here on the 4 hour. Same situation, except we've now created this bullish fair value gap. So why would I still be looking for shorts? People think that I'm nuts. Well, the reason that I'm looking for shorts here is quite simple, right? Because if I'm bullish here, I still have an expectation, treating this as our premium discount range, right? That price is going to work its way down here into this fair value gap, which is down at discount, meaning that it provides higher probability long setups, right? So let's get rid of that in a minute and accept that we're targeting this, yeah? We're going to just get rid of this for a minute because we know that we're bearish. Now, this is how I trade it, okay? I go down to a 5-minute chart. I've got a ready-made target down here, yeah? Now, what I need to see in here, right, is a structure breakdown that leaves me displacement that I can use my entry model and trade lower, right? And then I'm going to show you how I'll mix that with risk and reward. So we know that we're targeting this green box. We don't know where within the green box. We've got this 5-minute fair value gap here and we have ones lower. Now I want to make sure that I've got a decent risk to reward by the minute we hit this green box. So I need this play to take place in the New York session, which is here, yeah? So New York session for me, I'm interested in this from 1:30 in the afternoon, which is 12:30 UTC, 13:30 British Standard Time. And I follow this through to about 10 p.m. It covers the AM and PM sessions for me in New York. So all I need to see is really, really simple. I need to see a low, a swing low broken. Yeah, so we have this move here. Price comes down, rebalances, starts to build structure higher, right? Now, what else did I say that I like to see here? A sweep. Right? So as soon as we come to here, I'm looking left. Is there a high? Right? There is. What can be above that high? Stop losses. Yeah. So I'm not just going to place a limit order there. I want to see price tell me or give me indications it's ready to move lower. Yeah. Excuse me. So structure break. We've had a sweep. Yeah. We've had a low put in here. So this is the low that we need to see closed. Yeah. That's where we get our shift. Now, this is really important. People ask me about this a lot. How long would I leave this position open for? Well, this is my kind of first target down here, right? If this low here, this drop had hit that, I wouldn't enter a position because my assumption is liquidity has been taken. However, we also have these nice relative equal lows down here, which is telling me that that seems like ready-made liquidity for price to target. Why? Because if I was a seller up here, I want people to buy mine down here, yeah, and I want to make that margin, yeah. So we're here. What else do we need to see on any drop? Like a broken record, what do I always bang on about? I always bang on about displacement, yeah. So we have this move lower. Excuse me. Now the displacement that we get here is the fair value gap, which is bearish, which means that my short position would trigger here on the low of that. I can have two stop losses here. I can be super aggressive and go at the one above here, or I can be more conservative and go above the one here. Now, the key thing for here is this affects my risk to reward. So if that's my first target, what have I got here? I've got a 2.64 if I go for the higher one, or if I want to embrace a bit more risk, then I've got a 4.86, yeah? Always remembering that, especially with crypto, these things can be a little bit volatile, right? So it can sneak up and take these. I also do like to never put it directly on. You'll notice I always put it a few points above, right? Just to allow for any kind of illiquid moves. And then we can see ultimately we get price delivered to target, right? Now, the reason I would hold that beyond the end of the New York session is purely because of the TA that we did on the higher time frame and there being an expectation that price will draw down into this. Now, it might not have done that. You know, it really could have just gone super bullish from there and flown to the moon, as you would say. However, if that had happened, we know where our risk is. We take our 1R loss, right? And then we come back and reassess. Also, because we're counter trend trading the high time frame bias, we would use half a position size here, yeah? Meaning that we also embrace half the risk, okay? So just very quickly, just for anyone that's looking at LTC as kind of plays moving forward, because we can all do it, you know, with the power and beauty of hindsight. What I'm looking for here is quite simply to see if we get any kind of bullish reaction in here, right? We need to wait for the daily to close, of course we do. However, now that we are drawing down in here, take our premium discount. what we can do is start to break down onto lower time frames, 15-minute or even the hourly. Oh, and actually, the 15-minute just has a beautiful one here. So we know we're down in discount. We know we've got this that we expect to support price. But by decanting this lower, I like the look of this here, right? So what I'd really love to see today from Litecoin, if we're expecting some bullishness, is ideal scenario one is that we dip down into this come New York, regain market structure, and we look for higher prices, right? Or if price does just kind of float around here, maybe it doesn't want to dip down into this one. If we go on to say an hourly, we can see that this is just one big fair value gap here, right? And we know we're already down. We know that we're already down in discount, right? So it's a really, really good place. Oh, 15 hours is a bit ambitious. So if we don't get down into this, what would I want to see? Well, I'd like to see a sweep on liquidity. Maybe we had this here in London. But what I do like looking for are the lows of prior trading sessions, yeah? So this is where I put my session breaks on. And you can do that. Just click on your chart settings, go to events, right? And then just session breaks. Oh, goodbye, Nick. See you later, mate. Sorry, I probably missed him now, isn't he? We'll definitely catch up with you. I'll take a look at your message later, my friend. You see this grey line, thin grey line? That's the start of the new trading day, right? So that's UTC midnight, which is we're UTC +1 here. So that means that these lows here are the session lows. So London, this could have set the low of the day. So I'll mark this up and I'll set that as LOD, telling me that's the low of day. Now, in an ideal world, come New York, if we don't get all the way down here, I would see a purge of this, a recovery of market structure, and then price moves higher, right? So let's just say, for example, that it leaves a high here. That becomes our structure break. We would look for a fair value gap in here that we can trade. Our entry would be here. Remember, we have to see displacement in this move. This move needs to leave us this fair value gap. Our risk then goes a few points under the low. We've got a beautiful ready-made target here in this first swing higher, but ultimately we're reaching for prices higher up. We would mark these and watch market structure as it goes up, but should we get ourselves into a good position here and hold some runners, run this all the way up to here, we've got ourselves a ready-made 5-6R trade, all right? You don't have to hold for those like super normal returns that you see some people post. Me personally, my average R is fairly low. I have this system has a relatively high win rate over the sort of 60-65% rate. So for that, you can afford to absorb a lower risk to reward. Someone like Burb, for example, who's a trend follower, has a much lower win rate, sometimes down in the 30%, but his win rate in terms of his risk to reward is really, really high. Yeah. So it's understanding that. So look, I hope that hasn't been too convoluted, and that has kind of given a little bit of an insight on how you can play these moves, especially when we have really, really big days that do just kind of fly away from us. We have got a lot of news events this week that could catch up with us and that could affect the market. One thing I would say is also if the markets are really, really pumping as we move towards the latter stages of the week, we could see some hawkish positions taken by the Fed, meaning that they could be trying to put a little bit of information into the market that make you really kind of want to kind of suppress risk because they don't want inflation to get back out of control. All right. So I hope that's been really helpful. Just want to say a really, really big thank you. Erica, always a pleasure to have you on the stream, as it is with you. Nit, Hans, my friends, Whack as well. Stream Doctor, great to have you on there. Really appreciate your input. Aerosmith Forever, love the name. I hope that's given a little bit of insight on how I look at that with Litecoin at the moment. James 14, brilliant. Burned, was great to have you back on here today as well. Hasta la vista, Barbie. Brilliant to see you as well. My good friend Tony Hilson, brilliant to see you back, mate. Really, really is. Looking forward to working closely with you again soon. Our lovely Kelly Barker, so all the way from New Zealand. Let's not forget that, people. Goodness knows what the time is over there with her. Absolutely bless you. Kelly, love having you on these streams, as I do all of you as well. And Kelly Kellum, who got a really nice intro this morning as well. Touche too, as well. And just hopefully I haven't missed anyone. Really big apologies if I have. It's been really fantastic having you all here. Sorry, Brawl as well, you sneaky beast in the background there, being all wonderful. I can't believe you didn't say hello. Would have loved it. Bram Soul as well. Awesome. Thank you very much, mate. My lovely, lovely Brawl. If you ever see me out and about in person and I'm looking stylish, it's probably thanks to this magnificent lady. So, All of you have a fantastic day. Have a great week. Okay, really do keep your eyes on it. Greetings from the Netherlands, only like my favourite country in the world. There and South Africa. In fact, just sitting there last night planning another trip to the Netherlands. Just one of the most beautiful places. Got some amazing friends over there, and honestly, some of the best traders in the world from that place for such a tiny country, such legends. So big greetings to you as well, and all you guys as well. Brawl, say hi to the legends over at Dank's Country Club for me as well. And if you guys don't already, you need to go and check out Trader Dank, Daink. Hit me up for him. I will give you his Twitter handle. He is one of the very, very best and one of the legends that you really need to learn from while he's still around. All right. Come and join us over at the Nest. We've got free sign-ups. We've got everything you need in the description. If we haven't, come and reach out to me on Twitter. And as always, just have yourselves a fantastic week, guys. Trade safe, and do just have one little eye on the news this week, because there is a lot of red folder news out, all right? Big love to everyone. Have a great week.